Yesterday, we highlighted some notable options activity in Chinese stocks and ETFs. That region saw continued strength and activity today as well. But the news of easing travel restrictions in China actually propelled the energy sector even more. We'll discuss tonight on Open Interest. Front-month Brent climbed $1.30 a barrel to 120.81, while WTI closed at 119.41. Consumers are paying record high prices at the pump, yet crude oil is still well below the all-time highs in 2008. It seems oil traders believe easing restrictions in China could increase oil demand, while expressing doubts that OPEC Plus will increase output sufficiently. The bump in oil prices made energy the best performing sector today. The S&P 500 rose just under 1%, while the energy stocks within the index rallied over 3%. Among the better performing names, APA Corp, Valero, ExxonMobil, ConocoPhillips, and Marathon Petroleum. Many of these companies, unsurprisingly, traded above average options volumes, and in most cases, the flows were net bullish. Upstream E&P company APA Corp, most active contract were the July 50 calls. Over 2,400 of those traded for just under $4.40 average. Obviously, traders betting on upside there, but downstream was also busy. Refiner Valero Energy traded almost 2.5 times the average daily call volume. September 175 calls were the most active contracts. Over 1,500 of those traded for just under $3.75 a contract. Integrated oil companies ExxonMobil and ConocoPhillips also seeing above average activity. Exxon was one of the busiest single stock options today, trading over 335,000 contracts in total. Much of the activity was short dated, but we also saw the July 110 calls and also the September 115 calls trading quite actively, with some options traders betting on 10% plus upside moves within the next 2 months and 15% to the upside within the next 3 months. This activity was consistent with the view articulated by Marko Kolanovic, senior researcher at JP Morgan, who said earlier on Fast Money that although many energy company stock prices are higher, their valuations are actually lower as earnings are growing faster than the share price. He also pointed to the all-time highs in crude from a few years ago as evidence that consumers can live with higher oil prices. That said, the prices at the pump are more painful now than they were then, and consumers are facing sharply higher prices across a broad array of goods and services, which to me suggests consumers may have less discretionary spending available. Another issue is that pump prices are highly visible to consumers who are also the electorate. If pressing longs, I would certainly favor options as the vehicle to do it, and I might consider exposure to natural gas over oil, which is trading a bit cheap relative to oil in North America at the moment. I've mentioned Antero Resources on options action in the past and hold call spread risk reversal in it myself currently. It hit fresh highs today and calls outpaced puts by 7-1, led by the July 50 calls, over 2,700 of which traded for around $3. Antero generates significant free cash flow, and if natural gas prices simply adhere to the current forward curve, the company could generate more than $10 billion in free cash over the next 5 years. The company, which was very cheap and not that long ago, is certainly still less cheap than it was, but is still quite reasonable at about 7 to 8 times forward free cash flow estimates. If you enjoy these videos, do me a favor. Click the like and subscribe button. And if you have any open interest of yourself that you'd like me to address in a future video, leave us a comment. Thanks for watching.